The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
That's right. That's me, Ken Shreve. Thanks very much for tuning in, folks, to Breakout Investing on TFNN. If you want to give me a call, talk about this market, if you have questions about anything, you can use this toll-free number, 877-927-6648. Breakout Investing airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. My show is also available as a podcast on iTunes, so if you can't listen live, head over to iTunes and get a free download. And don't forget, all TFNN programming, you can listen right on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. And the show is carried live Tuesdays and Thursdays, Channel 1, Tiger TV, right on the homepage of TFNN.com. You can listen to the radio show, also look at charts that I'm going over as well, and the show is archived on Channel 13. Folks, don't forget tomorrow's online Master Trader class by TFNN colleague Basil Chapman, Friday, June 8th, 9 a.m. to 5 p.m. Eastern Standard Time. Basil is just going to go over how he does things, how he approaches the market. First 2 hours talking about the Chapman wave, peaks and trough, that kind of stuff. So Basil knows what he's doing. Check that out tomorrow, Friday, June 8th, 9 to 5 Eastern Time, and you can get more information right on the homepage of TFNN.com. All right, let's take a look at the market here. 50 minutes left to go in Thursday's session. We'll refresh the chart of the Dow. You know, normally I don't look at the Dow a whole lot, but it is outperforming, or it was outperforming at one point today. So let's start with the Dow. It is up 101 points, 0.8% to 12,416. Third day of a rally attempt for the blue chip index. Some will say that Monday, even though it was a down day, it closed up near its session high. You could probably count that as day one of a rally attempt. Today is day 4 of a rally attempt for the S&P 500 and NASDAQ composite. So still haven't gotten a buy signal from the market. We'll get into that in just a little while. Big gains for the market yesterday, but they occurred a bit early, only on the third day of the rally attempt. But clearly the market's acting better here. Still not clear to me, though, that new money is coming in from the sidelines. So still cautious here. Just would rather follow the strict set of rules that I do follow in terms of guiding me back into the market. I've nibbled lightly at a couple of stocks lately, but that's about it. Just not clear to me that this trend is ready to turn higher yet. So the Dow doing well today, just up over 100 points. Let's check in on the S&P 500 here. And we'll see that it's underperforming a little bit, up 7 points, 0.5% to 1322. 1322, day 4 of a rally attempt for the S&P 500. Let me see what that resistance level is for the S&P 500, approaching a recent high here. That's going to be 1334, almost 1335 right here. So that's going to be your first significant price test for the S&P 500, and we'll see if it can get over that. Then, of course, its 50-day moving average here at 1358 could be a resistance level as well. So so far so good when it comes to the rally attempt, day 4 for the S&P 500. No buy signal there. It was up yesterday 2.3%, I believe, and volume did come in higher than the day before. But again, the day really had the feel of follow through. It was strong. There was a lot of, fair amount of conviction behind the buying. But you want to see these follow through days, these buy signals, minimum day 4 or later into a rally attempt. Yesterday you probably still had some short covering going on, and I have to say, when I was looking through my growth screens yesterday, there were isolated heavy volume breakouts yesterday, but I saw a lot of them in the small cap space. But there weren't that many. And then when you look at some of these very liquid large cap growth names, institutional quality growth names, just about all of them yesterday were rising in very, very light volume. So while you saw some that were up 3, 4, 5%, there was just no juice behind the move, which was another it just gave me pause yesterday. So that's a look at the S&P 500, and let's finally check in on the NASDAQ here. NASDAQ Composite also day 4 of a rally attempt for the tech index. It is well off its highs. It hit an intraday high of 28.73. Now trading up just 4 points to 28.49 for the NASDAQ. So, bottom line, this market still has more work to do to prove to me that an uptrend is going to have staying power. We're in a tough period of time for the market here. The month of June, summer vacations are approaching. Volume has been light in the market for a long time now, and we're getting into a time of the year where volume is typically even lighter in the market during the summertime. So on the one hand, it's hard for me to see a rally gaining meaningful traction here, but on the other hand, we have to be open to that possibility, and frankly, even open to the possibility of a low volume rally. Because I got to tell you, when I talked to people yesterday about the big gains, the NASDAQ up 2.4%, S&P 500 up 2.3%. There wasn't. I talked to a bunch of people yesterday. Not one of them believes that this rally is going anywhere. Not one. And you've heard me say on the show that when the crowd is slanting hard one way, what does the market do? Tends to go the other way, tends to do the opposite of what is expected. So it remains to be seen how this is going to play out. There are some good technical setups out there, and we'll go over some of those today. But what I'm seeing is that there are a lot of interesting stocks out there building bases, but they're just not ready yet. They're still in the base building process. They're still consolidating gains. Remember that breakouts don't happen from deep inside of consolidations. There are still overhead supply for these stocks to work through as they try to work their way higher. So more base building has to be done. And that's another thing that gives me pause here. Market conditions definitely improving. No question about it. We're still early in the rally attempt here. I'd really just like to see one more day like yesterday over the next 10 days or so. We can get another big day for the market, gains of 1.5%, 2% or more. Volume comes in higher than the prior session. Then you'd have legitimate follow through, and then we'd have to see where it takes us. A reminder that follow through days in the past sometimes they mark these tradable rallies where you might get a 5%, 6%, 7% move in the indices, and then selling comes into the market again. Sometimes they launch meaningful new bull markets. I tend to think that if we do get one, it's probably going to be more around the tradable rally realm. But again, I don't like to make too many predictions here, but let's just wait for that follow-through day first. I might nibble here and there, but not much more than that. I'm not convinced that the market really truly wants to head higher here. I mentioned the good outperformance in the Dow. Actually, before we do that, let's just check in on volume today. Pretty close to what we saw yesterday on the NYSE Wednesday. Even though volume came in higher than Tuesday's level, it was only around 850 million shares, so slightly above average, higher than Tuesday. But we had 850 million on the New York Stock Exchange, tracking pretty close to that today. NASDAQ volume just a tad lighter. Yesterday we had 1.73 billion. That's about average. We're tracking again close to that today. So looks like light volume again today. But let's take a look at the Dow. Good outperformance in the blue chip index. Take a look at some blue chip components that are actually firming up at their 200-day moving averages. IBM has taken a beating recently from $207 a share all the way down to 188 thereabouts, but nice bounce off the 200-day moving average for IBM. Shares up $1.31 today, 0.7% to 195.30. This is an example, again, of a stock that is consolidating gains. I mean, there may be some traders out there that are, trying to pick this up off the 200-day moving average, and if they did it Monday, Tuesday, they've got a few points of gains, but the 50-day line at $200 a share is most likely going to be a resistance level for IBM. This is still a stock that has a lot more work to do to complete the basing process. So IBM support at the 200-day moving average. Let's take a look at Intel, also in the Dow, showing similar price action. Here's Intel. Comes down to its 200-day moving average, rallying for three days in a row. It's in the bottom half of its trading range today, down, up 4 cents to 26.11, but off its intraday high of 26.43. So Intel, another name in the Dow, finding support at the 200-day line, and also Microsoft. Let's check in on Microsoft here. All three stocks showing signs of life. Microsoft, though, see, comes down to its 200-day moving average. It hit an intraday high today of 29.70. The stock has reversed. It's now down 6 cents, trading near its session low to 29.30. Other strong price performers in the Dow. I do have one Dow component in my Ultimate Growth Stocks model portfolio. I've been pleased with its performance. Walt Disney doing well today, up 0.7% to 45.86. That is a current holding, again, in my Ultimate Growth Stocks model portfolio. So that's what's going on there. Ultimate Growth Stocks is my weekly newsletter. Haven't mentioned that yet. I publish every Tuesday, and I send out email buy and sell alerts in between. A comprehensive update on Tuesdays. I do have a model portfolio with newsletter as well. So if you want to check that out, you can go to kenshreve.com. That takes you over to my TFNN page, where you can click on the Ultimate Growth Stocks banner and try the newsletter free for 30 days. Why not? Good deal there. Other strong performers in the Dow. Let's keep moving on here. Home Depot. Really like the look of Home Depot here. This is a stock that's building a nice base here. Outperforming today, up 1.6% to 51.41. So Home Depot continuing to show nice relative price strength. Quickly approaching a swing point here of 52.88. So again, you have some stocks that are deep inside their bases. Other stocks like Home Depot that have moved up off their lows. That's now back above its 50-day moving average. Not out of the question that you could see, a breakout soon in Home Depot. Walmart, Verizon, other strong performing stocks in the Dow. Earlier today, a couple of headlines. Ben Bernanke, in front of a congressional panel, said that the Fed prepared to take further steps to stimulate the U.S. economy if it weakens further. Said that the European debt crisis continues to pose a significant risk to the U.S. financial markets, weak jobs market. They're meeting again June 19th and 20th. We'll see if they extend Operation Twist or not. But not much new in the way from the Fed today. Stick with me, folks. We'll be right back, headed into our first break here. You're listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Another headline earlier today, we had a surprise rate cut by the People's Bank of China. They lowered a key interest rate by 25 basis points. First quarter GDP in China, I think, was right around 8.1%, I believe, and there's talk that growth in the second quarter could screech to a 7.8% growth rate. So China's economy is still growing very rapidly, but they're looking for ways to stimulate the economy. So the interest rate cut earlier today put Wall Street in a very good mood. But we're kind of last check of bleeding a little bit into the close here. The Nasdaq is now negative, down about 2.5 points to 2842. S&P 500 up 4 points to 1319, and the Dow up 84 points to 12499. Day 4 of a rally attempt for the major averages. Other economic data earlier today: weekly jobless claims came in at 377,000. That's down 12,000 from an upwardly revised 389,000 the prior week. 377,000, mostly in line with what the market was expecting. Taking a look at gold. Gold really took it on the chin today, down $46.20 2.8% to $15.88 an ounce, $1,588 an ounce. U.S. dollar index lower about 0.3% to 82.06. Let's check in on the GLD here, the Spider Gold Trust, and volatile, very, very volatile session for the GLD today, down $2.93, 1.9% to 154.28. You see this big, wide price swing here, trying to fill its gap from last Friday when we had that weak jobs report and the big rally in gold. But pretty volatile session for GLD today. And then crude oil down 20 cents, not much movement in oil, down 20 cents, 0.2% to 84.82 a barrel. Let's check in on the U.S. Oil Fund. USO, one of the more liquid oil ETFs out there. After hitting an intraday high of 32.80, it is now pretty much at its session low. Down 43 cents, 1.3% to 31.72. So very ugly technical picture for USO. And hey, oil prices going down as much as they have, that has resulted in a lot of ugly charts in the oil and gas sector for sure. You know, I mentioned yesterday big gains for the market. The gains occurred on day 3 of a rally attempt for the major averages. It was really uncanny. I was going through my screens and just really looking for signs of accumulation, you know, just clues that new money is coming in from the sidelines. And just really wasn't seeing it. And, you know, you look at a name like Apple, AAPL. Let's check in on Apple today. It is still trading underneath its 50-day moving average, but volume just very light during recent price gains for this stock. Up $1.54 today, almost 0.3% to 573. But you know, that 50-day moving average could be a resistance level at this point. Just not seeing meaningful buying demand in any of these institutional quality growth names. You know, we've talked about Priceline a lot. Let's check in on Priceline. There's a lot of technical damage in Priceline here. This is a company that just does not look very good at all to me right now. Priceline trading near its session low after early strength, now down $3.51 to $6.39. Also below its 50-day moving average. I would say that Apple, I definitely give the edge to Apple over Priceline in terms of overall technical health. But, you know, whether it's Apple, Priceline, Intuitive Surgical, ISRG, some of these stocks have been trying to rally, but just not really seeing anything in the way of meaningful volume. Intuitive Surgical is working on 4 straight gains, but after early strength, it's all the way at its session low today. After hitting an intraday high of 542.76, Intuitive Surgical is now only up 66 cents to 534.10. Same with MasterCard. You know, these are all growth names that I consider, you know, that have a good institutional following. MasterCard. You know, this is very interesting here. See, 3 days in a row, it comes right up to its 50-day moving average, hits a high of 425.07 today, reverses down near its low, now down $4.22, 1% to 415.76. I'll tell you, this market can give you clues. I mean, this is the action underneath the surface today has not been all that good. We're still very early in the stages of a rally attempt. It's not clear to me what the market trend is right now. What I do know is we're still in a downtrend. That's the bottom line. We're still in a downtrend. Ken Shreve, folks, TFNN, you're listening to Breakout Investing. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Home builders doing very well Tuesday and Wednesday. The iShares Dow Jones U.S. Home Construction Index Fund. Let's check in on that. ITB, the popular ETF that tracks the home builders. It is extending gains for a third day. Hanging in there pretty well today. Market is weakening as we head into the close here, but ITB still up 1.5% today to 1494. On Tuesday, this ETF was up 3.4%. Wednesday, yesterday, during the big gains for the market, it was up another 3.8%. But I mean, this is another situation. Even though you're seeing strength, buyers coming back into the ITB. You can see it's basically just right back to its 50-day moving average. So it's in the process of working on a base here. It is showing signs of life, no question about it. But a lot of home builders out there that just aren't ready yet, in my estimation. Let's take a look at Lennar here, ticker LEN. See Lennar working on 3 straight gains. Boom, comes up to its 50-day moving average, gets turned away, trading in the bottom half of its range today, still up 7 cents to 26.36, but well off its session high, turned away so far at its 50-day moving average. Let's take a look at DR Horton, DHI. Here's another stock up 3 days in a row. DR Horton, excuse me, outperforming nicely today, up 2.4% to 1568, still below its 50-day moving average, but to its credit, up near its session high today. So DR Horton continuing to attract buying interest. And finally, let's take a look at PHM, which is Pulte Group. Pulte Group, again, right at its 50-day moving average here, 3 days of gains, up 2.6% to $8.98. So home builders definitely acting better here, but it is still too early. In a case like Pulte Group, I mean, this is a low-price stock, and I typically don't target stocks under 10 for my Ultimate Growth Stocks model portfolio, but the you're pretty much looking at a resistance level. Its recent high set on May 29th of 962. 962, that's going to be right here. So if Pulte Group were to be able to move over that 962 level and see a good volume expansion as it takes out that swing point, that might be a good time to start a small position. But really, we just want to wait for a confirmed market uptrend here. It's much easier to make money in a uptrending market rather than a downtrending market. And again, we went into the last break saying that even though we're on pace for 4 straight gains, at least for the Dow and S&P 500, the market is still in a downtrend until proven otherwise. All right, we got a caller on the line. Let's go to Tampa and talk to John. John, how you doing today?
Hi, I'm doing fine. Thank you for taking my call. My question to you is on seeing that the market popped on the information of China. I got out of my long position and thinking about going short. I'm thinking about Best Buy. I know they're coming out with earnings, I think today, tonight, or tomorrow morning. What do you think about Best Buy? I'm looking at the chart, and it's looking a little weak. And
so now, let me ask you this, John. I mean, so your general market stance right now is that I thought I just heard you say you were thinking of going short, or what are you feeling about this market?
I was long since last week.
Okay.
Fortunately, I did good. I was. Now I'm trying to see that the market is not gaining any strength right now, and it's looking a little weak. Maybe
it is.
It's turning around, and trying to think about shorting Best Buy. What do you think about that?
Well, obviously Best Buy is a company with a lot of troubles. I don't see really anything to like about the stock. It's just a wild day of price action today. Big intraday. Let me put it up here on Tiger TV for people that are watching here. Now, I'm not sure. I don't have an earnings date for Best Buy. But there was news today that their chairman and founder, Richard Schultz, resigned today. That's why there's a lot of volatility in Best Buy. He owns 20% of the company. He's thinking, he might sell that to somebody. But, Best Buy is obviously, they're getting their lunch eaten by Amazon, Costco, you name it. So I don't like the stock at all. Whether or not I think it should be shorted. I'd probably just have to do a little more work on it. It's obviously in a downtrend here. It has been hit hard by institutional selling. It hit that low of what was it, 1750 or so back on May 21st. It's come up off that low, but another day of pretty stiff selling in the stock today. So I tend to short technically weak stocks as opposed to technically strong stocks, and Best Buy is technically very weak. That's what I would tell you.
Oh, okay. So you see more of the risk on, since it's been beaten up a little bit, more of the risk on the that it can turn around?
Yeah, I think the risk for more downside outweighs the potential for more. I mean, weighing risk reward here. The risk for more downside here seems to outweigh the potential for more gains. Now, again, the wild card here is that if you do have earnings coming up, and while I have you on the line here, let's just see if we can confirm an earnings date for BBY. I can get that in a matter of seconds here. But BBY is going to be report. Yeah, no, I see their next earnings not due for a while. So they don't have any earnings coming up as far as I can tell.
Oh, okay.
Yeah. So negative headline for the stock today. No question about it. It hit an intraday high of $20.32, a low of $18.19. It is trading up near its high today, but this is a stock that I don't know too many funds that are interested in owning at this point. That's for sure.
Well, thank you for clarifying that, and thank you very much.
All right, John, appreciate the call.
Thank you. Bye-bye.
All right, yeah, that's a big mistake that, and John is not in this boat, but when people go short stocks, boy, the majority of people I talk to, they like to short strength. They like to short stocks with positive qualities. They like to short stocks that are near highs. They like to short stocks that are going up, not down. I guess that's human nature, but it just it seems to me that if you want to make a bearish bet on a stock, you want to short a stock with bad qualities. Best Buy has a lot of bad qualities right now. There's no doubt about it. Their execution problems have been well known for a little while. The main issue right now is the bulls will say a lot of bad news has already been priced in here. So, but bottom line is when you go short a stock, you want to short stocks with a lot of bad qualities, and I don't see many good qualities in Best Buy right now. A company that is has just not done well with the competition. Let's take a look at some earnings reports today. How about late Wednesday? We had a recent IPO, Annie's. That's ticker symbol BNNY. Let's take a look at Annie's. Stock is down 3.7% today to $34.63. Annie's is a natural food, organic food company. People swear by their macaroni and cheese. Numbers weren't too bad. Earnings up 16% from a year ago to 22 cents a share. Sales up 17% to $43 million. Annie's is a small company, market cap of $625 million. It came public in late March at $19 a share. It is trading around $34.63, so well above its offering price in March at $19, but technically a weak stock here, not near a buy point in my estimation. Underperforming today, down 3.7% to $34.63. Let's see what else we got. Lululemon, I used to own this stock a long time ago for the Ultimate Growth Stocks model portfolio, but Lululemon really taking a beating today, down 8.9% to $63.81. High multiple stock here, has always sold at a premium valuation. Earnings up 52% from a year ago to 32 cents a share. Sales up 53% to $285.7 million. But still, stock selling at 50 times trailing earnings, 31 times forward earnings. It's really all about the outlook in companies like this. Lulu really getting taken to the woodshed today because their second quarter outlook was, some say they lowballed it. They're going to under-promise and over-deliver. But looking at the amount of selling in the stock today, doesn't look good. Lulu is still holding above its 200-day moving average at 61.13, but stock getting hit pretty good today. This stock is not a buy, even though it is a lot cheaper than it was yesterday. And also another company with good fundamentals, but boy, getting crushed today. Titan Machinery, similar business to Tractor Supply. Titan Machinery down 21% to $26.19. The company operates agricultural construction equipment stores, earned 36 cents a share. That was down from 40 cents a year ago. They missed estimates by 2 cents. Rising costs, a big issue here. Sales, year-over-year sales growth, impressive, up 33% to $422 million. That was about $25 million ahead of the consensus estimate for sales, but crummy day for the stock, down 21% to 26.19. You can see it's coming very close to that long-term support level. Its 200-day moving average at 25.49. A lot of names I like out here right now. A lot of names I like are out here. It's tempting to buy them, but I take pride in having a very disciplined approach to the market. In other words, things need to be in place before I start recommending stocks to buy to my subscribers. But let's take a look at Amazon. I still like the potential of Amazon quite a bit. It is looking good here, up $1.78, 0.8% to $219.42. Amazon has sacrificed profitability in recent quarters to focus on building out their infrastructure, distribution, more warehouses, things like that. But let's take a look at Amazon. Even though it's sacrificed profitability, the top-line growth at Amazon has been exceptional. I mean, 30% plus each quarter, very, very solid. Amazon is in a good technical setup here. It's a bullish chart, and I'm going to show you Amazon just as a good example of what a proper base looks like. Here's the start of the base over here in the fall. Came down, started to work its way higher, established a swing point here of 233.84. Now it's forming what's called the handle area in a cup with handle base. So you could see a buy point fairly soon in Amazon. Again, the question is, do you want to buy a stock when the broad market hasn't given you a buy signal yet? You're always taking on a little added risk by doing that. Sometimes it'll pay off, sometimes it won't. So this is a name I'm watching. I do believe it has an ability to outperform going forward. Also like eBay a lot here. Let's take a look at eBay. This is a stock I used to own at one point in the Ultimate Growth Stocks model portfolio. I may revisit it soon if we get a buy signal from the broad market after early strength. Kind of a disappointing day for eBay. It hit an intraday high of 41.72. It is now trading at 40.95, pretty much at its session low, only up a penny, but it is in a good technical setup as well. Big gap up here in April when the company reported earnings. PayPal is really the crown jewel for this company, the electronic payment service where you can pay for things online. But gapped up here, has been moving sideways, firmed up at its 50-day moving average. Let's take a look at the weekly chart for eBay, and we'll see. We'll see a decent technical setup here. 41.66 is the swing point. It actually just popped over that swing point today, but again, a sign that this market isn't quite right because there's just no volume in eBay. So what happens? It tries to clear that swing point, reverses, now near its session low. So kind of a disappointing day for eBay. Also watching Cirrus Logic here. Cirrus does a lot of business with Apple. They supply audio chip technology for Apple's mobile products, the iPhone and the iPad. Same thing with Cirrus, though. This is kind of interesting watching how these stocks with good technicals, or seemingly good technicals, are trading today. Cirrus now down 50 cents, 1.7% to 27.89. That's after hitting an intraday high of 29.17. So seeing a lot of selling in the market late here, and while I'm looking at this poor action in eBay and Cirrus, let's see what the market is doing here. Just give me 1 minute. All right. Yeah, we'll see indices well off their highs here. Let's check in on the Dow. It is trading near its session low now, up about 45 points to 12,416. The S&P 500, I think it's negative now, just down a fraction to 1314, and the NASDAQ Composite also trading lower. So weakness late in the day. NASDAQ underperforming materially here, down nearly 13 points to 28.32, reversing after recent strength. All right, final segment, folks. Stick with me. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a 1-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Let's take a look at a few other resilient names, stocks that have weakened today along with the broad market. But Equinix, another solid name here. You can see after early strength, this is trading near session lows, still holding above its 50-day moving average. Equinix is a provider of data center services. Stock is down $2.62, 1.6% to $161.55. It went all the way up to 166.63 earlier in the day. So some selling late in the market here. Let's also take a look at SXC Health Solutions. This company has been growing rapidly through acquisitions. Still like the potential of this stock, just not quite ready to buy yet. It is near its session low, down 55 cents to 92.95 after hitting an intraday high of 94.85. They bought Catalyst Health Solutions back in April, and normally when the acquiring company announces plans to buy another, you see that company fall. But in this case, SXC went up, I think, as investors realize that this indeed is going to help bottom line and top line growth at SXC Health Solutions. The company is a provider of pharmacy benefit management services, a PBM company, also healthcare information technology solutions. Also wanted to check on QuestCore, name that I don't talk about that much, but interesting company here, interesting technical setup. Again, a reversal today due to weakness in the broad market late in the day today. QuestCore down 45 cents to 43.56. But let's swing over, take a look at its weekly chart here, and we'll see a real nice technical setup for QuestCore. You can see that difference between daily charts and weekly charts, how they give you different perspective. QuestCore in a really nice cup with handle base here, swing point of 46.84. Still about 3 points away from that swing point, but highly profitable company here. Great top line growth in recent quarters. The flagship drug for QuestCore is Acthar Gel. It's used as a treatment for multiple sclerosis, infantile spasms, and a kidney condition called nephrotic syndrome. Acthar is also being looked at as a treatment for certain rheumatology conditions. Let's check in on the fresh market here. Another compelling growth name. Boy, a lot of selling in fresh market today. Stock is getting hit pretty hard, down 4.4% to 55.46. 55.46, the last price on the fresh market. Recently broke out over kind of a secondary entry point here of 54.97. Looks a little vulnerable here. This is a stock that probably needs to base and consolidate gains for a little while, but the fresh market really had an outstanding earnings report recently. Good top-line growth, good bottom-line growth, great same-store sales. In terms of the upscale grocers, you got Whole Foods Market, big player in the space. The fresh market is right there as well. And arguably, just being a newer company in the earlier stages of growth, I still think this one has a good chance to do well. But let's see it form a base. Let's see it digest its recent gains, and then we'll see a new entry point. I wrote about Live Person recently. This is a provider of cloud-based software, basically helps small, mid-sized companies facilitate online sales and customer service communications. Nice breakout recently for Live Person. It broke out over 17.25, 17.5 thereabouts. Hit an intraday high today of 18.53, down near its session low. Not surprising, seeing a lot of stocks looking like this chart today. Currently trading around 17.85. Real solid company here with good top-line growth in recent quarters. Don't forget, folks, my newsletter, Breakout Investing, you can get a free 30-day trial at kenshreve.com. That takes you right over to my tfnn.com page. Just click on the green banner. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. Have a great afternoon, folks. We'll see you back here next Tuesday.